Hey guys, Jason Schnitzer here with O.C Realtor Talk, and what I've got for you today is how's the real estate market, week 41 of the 2021 real estate market. So as always, what we try to bring to you guys is what's happened in the real estate market here in Orange County in the last week and put that into a couple minutes so you can stay up to date. So as always, let's talk about inventory. Inventory has slowly trickled down from up over 2,500 homes in Orange County here, California, to flirting with being under 2,000 homes. 437 new, 727 pending, again sticking to the trend of almost twice as many houses are going off the market that are coming on. Not too sure what we can point the finger at as to why that is. We've actually seen interest rates creep up. So if you saw last week's segment, what happens typically when you do see interest rates rise is a lot of those buyers that were on the fence get off the fence because they don't want to miss out on these historic low interest rates that they can lock in for 30 years. So what's new in the last week? Well, the biggest worry, and again, I've talked about this multiple times before, is inflation. You know, with all the stimulus that has been happening to the economy in the last 6 months especially, it's almost inevitable that we were going to see inflation, and the Fed's job is to keep that in check. How do they do that? Well, they have a program called QE, quantitative easing, which basically the government buys mortgage-backed securities and their money goes into the pool of the supply and demand, flooding the market with supply, with money being able to borrow, so that drives interest rates down. Well, if the government were to pull out, then there'd be less people, less supply with regards to money to be able to be borrowed. So in order for somebody to invest in a long-term bond or a long-term note, in the instance of somebody borrowing money to get a mortgage, well, the price or the return has to be, somewhat with some meat on the bone, if you will, for that investor. So what that means is we might see interest rates start to creep up. So what we're really going to pay attention to are the minutes from the Fed's meetings coming up here in November. Because what's really important is, they should give us an idea of what their philosophy and strategy will be with regards to pulling back on that QE. And it's going to be really important to dissect what they actually write in their official statement with that regard and how quickly they're planning on pulling back. Because all of those things are going to play a direct correlation or a direct effect and correlation to what's going to happen to interest rates. And we all know, if you've been watching, what our thoughts are, and my thoughts are, if interest rates were to go up, what's going to happen to our market. When interest rates go up, affordability comes down, and naturally supply and demand is affected with regards to demand from the buyer side, because not as many buyers are going to be able to afford the housing prices, and therefore we might see prices soften. So stay tuned. We're keeping an eye on this every week. Thanks for watching. Thanks for listening. As always, if you have any questions about how your real estate portfolio stacks up in this 2021 market, we'd love to help you out. Or even if you're thinking of how it could look in the future here, or expand it, downsize, buy up, invest, etc. Reach out to us via our socials or email, call, book a free consultation with us online at GaryandJason.com. So anyways, thanks for watching. Catch you next week. Hey guys, thanks again for watching this week's episode of O.C Realtor Talk. If you gained any value from this video, we'd really appreciate it if you liked, subscribed, and followed us on all our social media platforms.
Yeah, what Jason, I believe is really, really important for you, whether you're buying a house or selling a house, is understanding the process and knowing exactly what you're getting into. So if you ever have any questions, just follow the links below.